Business lines of credit are awesome until they aren't. Today we're going to talk about the dark side of business lines of credit and how to deal and cope when the bank cuts yours. All right, let's do this. Hello, welcome back to another episode of Finance Agents Live. This is episode number 86, and it's just me today, so if you're looking for some fun joke about the number 86, I don't have it because I'm not funny. I'm here talking about a very serious subject today, and that is what to do when the bank cuts your line of credit. Business lines of credit are awesome, but they come with a risk most people have no idea about, and that's what to do when the bank says, hey, I want my money back now, and you got to deal with it. Darren?
Hey, well, so you're saying you don't have any jokes, but when you get 86'd, you're cut.
There it is.
There we go. You did it. You didn't even know you did it.
I didn't even realize that there was a pun involved with the number. So yeah, when the bank 86 is your line, that's why it's show 86. It was unconscious. All right, good call. Okay, so jumping right into it, we're going to be talking about business lines of credit. I'm going to tell you what they are. You may think you know what they are, but I'll draw a distinction between some different programs. Why banks cut lines. We'll give you specific reasons to help you avoid it happening to you. What they can do to you and what they probably will to you. And again, will do. We're going to give you real examples so you see the difference between different banks and for you, how to cope. If you're under the thumb of some bank that's pressuring you to pay back all your money tomorrow, which is what they might do, we'll tell you what to do, what to expect, and kind of how to go along for the ride. What are your best options and, you know, how to cope, basically. All right, so jumping right into and by the way, if you've ever had a business line of credit, we're not talking about credit cards, even though credit cards are lines of credit. I'll talk a little bit about that in a second. But if you've ever actually had a business line of credit, talking about a cash line, you know, put it into the comments or the discussion or the notes after the show. We'd love to hear what your experience has been like, because my experience is that they are good until they aren't. Kind of like partnerships and marriages, right? They're good until they're not, right? And when they're not, you're kind of stuck dealing with it. That's what we're going to be talking about today. Okay, so what is a business line of credit? First of all, we have a whole other program called Unsecured Business Finance, where we set up business credit cards or personal credit cards or personal term loans that you can use for the business. They share a lot of characteristics with business lines of credit that we're talking about today, but there's a key difference on the ones I'm talking about right now, so don't confuse the two programs. That's what we're talking about. First of all, these are cash lines of credit. Usually they come with a checkbook or the ability to call the bank and say, hey, give me some money, and they go through a process and they put the funds into your bank account. It is not, they don't normally come with a credit card. They might be paired with a credit card, but they don't normally give you a credit card. So that is the key distinction. They're often much larger. People love business lines of credit. Why? Because it's cash, right? They give you, often we're talking about $100,000, $200,000, $300,000 line of credit. It's like having a bank account you can write checks from. And what's great about it is when you're not using the money, you're not paying any interest at all. When you write that check and start using the money, then you pay interest, but when you pay it back, you stop paying interest again. So that is really great for a business who has unexpected events where you need money for a little bit of time, you want to pay it back. You don't want to go out and get a term loan every time you have an unexpected expense because it can take a long time. So you go through the pain of setting this line up, and the line is there ready to save you when your business gets into trouble or to help you when you have a big opportunity. So awesome. Everybody loves them. They have easy monthly payments. The smallest one I've seen is $10K or $50K at some banks, $50,000. Most of the time I see them at $100,000 and beyond. So they're great. They are designed for short-term use, and that's one of the things we're going to be talking about, the consequences when you don't use them that way in a little bit. But they're really designed for working capital uses, short-term usage, and they are great for that. So that's what they are. The problem is when you get one of these lines of credit, the banks will often, at some point, cut the line, right? So they extend it to you, but you know how I said it's there for you when you have a rainy day or get into trouble? Well, maybe, right? Because just as often, if the bank sees you getting into trouble, they will cut that line. Or if the economy turns or starts going down, they will cut the line. And I'll talk about exactly what happens when they do, but let's just go over some of the reasons the banks might cut the line. First of all, a common attribute of a business line of credit is a mandatory scheduled annual or biannual review. What that means is getting one of the lines of credit is a pain in the neck, frankly. You got to go through full SBA style underwriting where they're going to go through your bank accounts and do a deep dive analysis. Guess what? It's not once. You got to do that crap every year or every 2 years, depending on what their terms are. I think it's kind of a mix between an annual or biannual, meaning every 2-year review, but just expect that every year or every 2 years, you're going to have to go through the whole underwriting process again. And if they don't like what they see, boom, there goes the line. They're going to say, hey, give us all our money in the next 30 days. You may be thinking, what? Right? I got $100,000 pulled from this line. You need to get it back in 30 days or 2 weeks sometimes, or tomorrow if they really don't like what you're doing. Then that is a very difficult thing to do. And that's really what the show is about today. So annual or biannual reviews are going to do that. That's one reason. Another reason is the banks have their own world, right? You know, sometimes they say it's not you, it's me. Well, for the bank, it might not be your problem, it's the bank's problem. The bank might be having trouble dealing with the government regulations, which are super strict and difficult to deal with, about their reserve requirements and how much exposure they're at based on their current, risk profile. And they may need to pull back the risk of these lines of credit. Because the weird thing for the bank is if they have a loan, they put the money out, it's coming back, they know what the risk is. But for a line of credit, they could have a few $100 million in exposure on lines of credit. And by just cutting the lines, they cut that exposure. And guess what? They cut your money. So banks may need to adjust their reserve requirements, and they might just go out and start cutting lines in order to make their life better. It has nothing to do with you. Another reason they may cut your line is they don't like how you're using it. So while it's easy enough to get the money out of the line of credit, it's even easier to get the money out and just keep it out and use it and just pay the interest rate, because the interest rate tends to be pretty low. But if you pull all the money out and you're just paying interest only, you're not paying the money back on a regular basis, they're going to say, hey, we're supposed to be giving you a line of credit. You're using it like a term loan, or not even that. It's even worse than a term loan for them because they're not getting any principal repayment. You're just paying interest only. The bank may not like that and say, you know what, this isn't what we were expecting. We want you to pay it back, and we're just going to cut ties, right? So they can do that. Or something else, they learn something about you that they don't like. Maybe they find out that you're in a line of business, or that you might be doing a line of business that they didn't know about. Maybe you missed a payment on your annual payment for your corporation, and it got suspended temporarily, and so they come back and cut it. Or you didn't file your taxes in time, or they decided they don't like your name anymore. Frankly, the reality is they can do it for any reason at all. When you sign that 100 to 200 page packet of terms and conditions for that line of credit, not everybody goes through and reads it line by line to understand what are all the things you can or can't do, and what can they do if they decide they don't like working with you anymore. But I'm going to shortcut and summarize it all into one sentence. They could do whatever the heck they want, and if they decide to take their money back, you can be screwed. In my experience, people with lines of credit have them until the banks cut them, or the people choose to close them themselves. But at least 50% of the time, the banks are cutting the lines for whatever reason. Maybe you're closing your business, you want to sell the business to somebody else, boom, line gets cut. You find a new line of business that you're interested in, you want to expand into that, bank doesn't like that, boom, line gets cut. Local market turned down, or global turned down, or anything, boom, line gets cut, the bank's going to pull it and going to walk away. So there's a lot of reasons that your line can get cut, and only some of them have to do with you. A lot of them have to do with the bank. All right, so again, what are some of the specific things that are often prohibited in the terms of line of credit? I just mentioned a bunch of them. One of them would be you are a restaurant and you want to open a new location. Maybe the bank doesn't like that you're opening a new location. Boom, line's cut, right? You have an accounting business and you want to also open up some other line of business. You're getting into a new type of business activity. If the bank doesn't like it, they may cut the line. As opposed to giving you more money for this new line and new opportunity, they may cut it. So let's say you are a business and you want to segment your business into sub-businesses for asset protection strategies. Maybe you want to open a separate LLC so you can hold your assets in one business. There's a lot of different reasons why you might open another related business entity, but just opening another business entity or having the funds being used for another business entity is justification for the bank to cut your line of credit. And I have a specific example of how that happened to us. So if the bank doesn't like what you're doing or who you're doing it with or how you're doing it, or you're using it like a term loan, those are all things that are usually explicitly prohibited to be done without their prior consent. And when you go to get that consent, you're just as likely to have the line cut. That's just the reality. Banks like to cut lines, all right? So let's say you're there, you're like, yeah, I know, it happened to me. I've got this $100,000 line of credit. Everything was going great. And all of a sudden the bank came to me and said, okay, we don't like working with you anymore, or we don't like your risk profile. We want to terminate the line of credit, give us all the money back. What can they do and what will they do, right? So first of all, they can do whatever the heck they want. They can do a lot of stuff. So what will they do is going to depend on how big a trouble the bank is in and how much of a jerks they are, frankly, because they can do a lot of stuff to you. So the first thing they can do is they can demand immediate repayment of the money. Doesn't matter what the impact is on your business, they can do it. You signed on the dotted line 82 times, maybe with a notary, saying that if they want the money back, they can ask for it, and usually you have to be able to give it back within 30 days or you are in technical default on the line. So they can ask for that. If you're saying, well, I don't have the ability to pay it back in 30 days, it happens all the time. If you can't, they can sue you, right? So expect to get a letter from an attorney and expect to get a court summons to defend or explain why you can't pay them back right away in court. That can happen. If they sue you, they have a lot of rights. Again, I'm not saying they always will do this, but they can do this. They can go to the court and they can freeze your assets. They can freeze your bank accounts and just ties everything up. They may not be able to pull the money back to them right away, but they can freeze your assets. Now, if you have a line of credit, you often have a bank account with the bank. They could go pull your money out of your bank account that's at their bank. I've seen them do it. So they can do all these things. These are very bad. In fact, this is one of the reasons why if you have a line of credit, I often recommend having your bank account at a different bank so that they can't do that to you. They can't go pull money out of a bank at a different bank account, but they can do it if it's at their own bank. And this is super important because that can crush your business. If you lose your line of credit and they take all your money out of your bank account, how the heck are you supposed to pay the bills, do payroll? You're left going to another bank looking like an idiot. The other bank's saying, hey, you just got your line pulled. I don't think we want to work with you either, and you are hosed, okay? So be prepared that it can happen. Let's say they go through this process, they sue you. You're probably the guarantor, so that means they can choose to report negatively to your personal credit. So that's another thing, and that might make it harder for you to go to another bank. And, to kind of summarize all this stuff, some people have an idea what the banks can do. Some people read through all the terms and say, yeah, the bank can do that, but they're probably not going to do that. Well, reality check, the banks can and will. It really depends on how much they like you or how much trouble they're in. So you got to be prepared that they can happen. These are all reasons why a term loan is much better. If you have a 7-year term loan, you're paying it off. At no point can they come and say, well, okay, not at no point. Almost never can they come and say, you're halfway through the loan repayment, you got to pay us the rest immediately. There are terms where you can go into default on that too. So don't assume with the banks there's ever a never, right? But it's much less likely. It's very common for them to let the term play out as long as you're making your payments. But with a line of credit, they could do it at any time. So that's what they can do. When it comes to what they will do, today I'm giving you 4 specific examples of stuff that we've gone through with lines of credit over the last 10 years, right? So when I say, at some point I kind of push the boundaries on what can I say, what should I say, all right? We're just laying it out there today to let you know exactly things that we've been through with lines of credit. Some people may think, it looks pretty bad. You say I had a bunch of lines of credit pulled. But one of the things I'd like to do is remove the stigma with having a line of credit pulled, because often it doesn't have anything to do with you. It might have to do with the bank. All right, so 4 examples I'm going to be giving you, And let's see here. We're going to play a little game of who's the worst bank. All right? So I'm going to give you 3 banks. I know I said 4 examples, but I'm going to give you 3 banks, and you'll understand why I'm only doing 3 for now. I'm going to give you 3 banks that pulled their line of credit, and we'll talk about who's the worst. So I'm going to give you a little preview here. The 3 banks are U.S. Bank, Wells Fargo, and First Citizens Bank. Now, Wells Fargo is kind of the bank that's, everybody loves to hate right now. It's kind of the bad boy in the market for a lot of stuff they've done over the last few years. So I would be interested for you to vote. If you're watching this, please vote right now. Who do you think is the worst? Is going to be Wells Fargo, the bad boy, U.S. Bank, one of the biggest lenders for businesses in the country, although a lot of people don't realize it. They do a ton of equipment leasing, and they have Elon, which has half of the business credit cards out there are owned by U.S. Bank, and you wouldn't even know it. So you got one of the biggest lenders in the country, Wells Fargo, one of the lenders that's loved to be hated the most, and First Citizens Bank, which is a smaller regional bank. So who do you want to have your line cut by? The bad boy, one of the biggest lenders in the country, or a smaller regional lender? We'll come back to this, but I would love to see your votes. Before I do that, though, let's talk about if it's happening to you right now, how do you cope with this? What are the things that you can do to minimize the impact? And I'm giving you guys time to vote right now, so I'm hoping to see a lot of votes by the time I'm done with this. First of all, if a bank is reaching out to you and they are considering cutting their line or cutting your line, from my experience, the best thing you could do is make sure to always answer their calls and or letters. Be very responsive. I have found that all the banks are better if you're responsive. If you try to be unresponsive or cagey, they will throw the book at you. So be on the phone and talk to them and be open and communicate the truth of your situation. If the truth of your situation is you can pay them back right away, you just don't want to, well, you should probably just do it, right? Because the things they can do to you are way worse than you just wanted to hold on to the money. But if you legitimately can't do it and you have reasons, let them know. But I would say, communicate your hardship to them, but also communicate your willingness and your desire to make them whole and pay them off. What you want to do, your best case scenario, if they call your line, is to get them to agree to term it out, right? Convert your line of credit into a term loan. That is your best case scenario so that every month you're going to have a consistent, reasonable monthly payment. Now, I say reasonable, depends on how long they're going to term it out for. And we're going to give you examples for lenders that termed it out over a long period of time or lenders that drop the hammer on you and need the money immediately. And so we'll kind of go over some of those options. Try your best to avoid courts and lawyers if possible. It's very expensive. If you can negotiate directly with the person at the bank without them even bringing an attorney, that is a win. Here's the deal. You got to pay this money back in some way or another unless you're filing for bankruptcy, and we will talk about that a little bit. So figure out the best way to do that. The moment the bank brings in the attorney, guess what? Now you got to pay back the loan plus the attorney fees, and those attorney fees can escalate quickly. And if the attorney starts playing hardball, now you got to get your own attorney. That is lost money on top of lost money on top of lost money because your attorney is going to be super expensive. Their attorney is probably going to be super expensive, and that is no fun. If you already owe $100,000, you could end up owing $150,000 after the court fees, $25,000 to their attorney, $25,000 to yours. Those numbers are real numbers. I'm not exaggerating. It's super easy to spend $25,000 in legal fees, and that's without even going into court or having lengthy depositions or anything else. So assume anytime you go to court is $10,000 to $15,000 just for your attorney. That's a really safe assumption, and it could be worse than that. So you don't want to have to add extra money on top of others. So please communicate directly with the resolution specialist at the bank. Try to avoid court. And I've been able to do that every time, thank goodness. Well, almost every time. All right, the last thing you can do is threaten and or actually file Chapter 11. That is the business form of bankruptcy that allows for reorganization. Threatening Chapter 11, not in a threatening way, but communicating your hardship in a way where you say, look, I cannot do what you're asking for. The only option I have, if you continue in this vein, is I'm going to have to be forced to file Chapter 11 because I just cannot do what you want, and I need to get my assets I can't allow you to freeze my assets. Need to be able to pay other bills. You're not the only person in the world. You're not the only bank in the world. The world exists around you. Banks are very prone to forget that. They're going to lean on you as heavily as they can. So sometimes you have to push back. With that said, I have not personally gone through the Chapter 11 restructuring process. That is going to cost more money, i.e. attorneys, and it's going to be tough. But it might be your best course of action, frankly. And that comes down to, when I say might be, relating to this, it comes down to whether or not this is a secured or unsecured line. Now, anytime you have a business line of credit, it is secured by your business. But is it also secured directly to equipment or things in the business? If it's directly secured to stuff, it's going to be very difficult to wipe it out or reduce that debt amount in a Chapter 11 bankruptcy. But if it's not directly secured, then going through the court process, often you can get that principal amount reduced, right? So if you owe them $100,000, you might end up being able to go through court and get it down to $50,000. So sometimes Chapter 11 is the best option. I don't have a lot of experience with that, so I'm not going to talk about that. But you want to know, and the big key is whether or not this is a secured or unsecured line. All right, so heading back into who is the worst bank, let's look through the votes so far. I'm seeing 1 vote for Wells Fargo, 2 for U.S. Bank. Get a UBF first. That's not exactly. All right, so I'm seeing.
Yeah, so it looks like U.S. Bank kind of.
Well, it looks like we're about even. I got a couple for Wells, a couple for U.S. Bank. We're about even 50-50 between U.S. Bank and Wells Fargo. Interesting, nobody thought the small regional lender, or smaller, they're not small, but smaller than these guys, small regional lender was going to be the one to work with. And that makes sense to me. I think it's a general assumption that you're thinking, small regional bank, they're going to work with you, while the big banks doesn't care about you. Especially the big banks, for our business, we had like a $5 million a year business. That is really small potatoes for Wells Fargo, but for First Citizens, it's a more reasonable business, and we're still small for them, but it's much bigger in comparison than we are to Wells Fargo. So I understand the thinking behind that. Do you actually know about this, Darren? Do you know about the different ones? Don't say if you know. I'm just curious if you know.
I know my experience between U.S. Bank and Wells Fargo.
Your personal experience.
My personal experience.
Yeah, what's that been?
It's terrible.
For which one?
Both of them.
Both of them. Okay.
Yeah.
All right.
It's been interesting.
Okay. All right. Well, good. Let's jump into the first one. I should have concealed the name, but whatever. So the first example we have is U.S. Bank. U.S. Bank at Finance Store, a prior company. At one point, we were working with U.S. Bank a lot, and so we went to U.S. Bank and we got a $100,000 line of credit. Frankly, we didn't really need it, by the way, which is when the banks are happy to give it to you, is when you don't need it at all. When they say that, it's kind of a joke. Or they say the banks will lend you an umbrella only when it's not raining, and then when it's raining, they take it back. That is more true with lines of credit than for any other type of financing. They literally want their umbrella back as soon as it starts to rain. So at U.S. Bank, we got a $100,000 line of credit. We were sending a lot of business there at the time, so we thought, what the heck, just kind of build our relationship. We let it sit for 5 months. We didn't use it. We didn't need it. And then I don't remember why we pulled the $100,000 and we were going to use it for something. Frankly, it was so inconsequential that I don't even remember. It really didn't matter. But we pulled it. We had it out for 2 months. And then the bank calls us up out of nowhere and says, we decided to pull your line of credit, pay us all the money back in 30 days. This was the first time I'd ever had a business line of credit, and I was floored. I was like, can they really just do that? Right? And immediately you start thinking, well, what the heck happened? Did we do something wrong? Is it that we just sat on it for 2 months? Were they expecting us to pay it back every month? At the time, we were in the early stages of negotiating with an outside private equity group that was looking to work with our business. The equity group got spooked. They said, why'd you just lose your line of credit, right? And now we have to explain to them why we lost our line of credit. But we had no idea. We had no idea at all. I personally called the bank probably 6 or 7 times, talking to different people saying, look, I need to know the reason that you're pulling the line of credit. I need to know, did we do something wrong? Possibly so I can help other people and not make the same mistake we did. Is there something that you don't like about us that maybe you just didn't know before? Or what, right? And literally, the bank absolutely, completely refused to disclose any reason why they were pulling the line of credit. And again, they stuck with, you need to pay us back everything within 30 days or we're going to sue you. So we just paid it back. Right now, when I'm going through the different banks, U.S. Bank has a benefit in this competition where we were actually able to pay it back. At the time, it really didn't matter. We did. I mean, it was a little painful for us to pull $100,000 out and just give it to them, but we had the money, so we just did it. So no big deal, really. But that was the first time I learned how the bank could come and just do that. And honestly, I was floored. I was just shocked. I had no idea that they could do that. And that's literally the first time anybody ever threatened to sue me. So, and being the PG on the line, I was just shocked. So, U.S. Bank definitely gets low marks for their actions in this. Frankly, I would have appreciated at least an explanation. I mean, our business, we helped people get funding. That's generally a restricted industry for banks. So if they just said, hey, we kind of thought about it some more and we decided we don't like your industry, I'm like, oh, fine, Or maybe there's some I don't know about. I still don't know to this day why they pulled the line of credit, and I wonder, and I think that's pretty crappy. So anyway, U.S. Bank gets low marks on this one. Bank number 2, Wells Fargo. All right, so a little while later, about 6 months later, we went out and got some more lines of credit for a big launch and rollout of finance agents, a big expansion of finance agents, which is what you guys are kind of living in now. So you got Finance Store, and we're using the money for finance agents, but we got the lines of credit from Finance Store. We got 3 lines of credit, one for $250,000 from Wells Fargo, one from First Citizens, and the other one from the bank which I will not name, and you'll understand by the time I get to the end of this why. So Wells Fargo, $250,000 line of credit. We had it for probably about a year. I pulled $240,000 out of that, so most of it. By the way, I never pull every dollar out of a line of credit. I think that's just a bad idea. And we used it to launch the finance agents rollout. Now, shortly after that happened, Finance Store split up. The partners decided to go their separate ways. So Trey Sublette and I and Darren and Rhoda and some of the other people you see here, we decided to go off with finance agents and turn it into its own business. So the money was there and being used, and we were fine for about a year. And then the bank contacted us and said, hey, what's going on with Finance Store? We, of course, told them what was going on. And they said, okay. They didn't like that. They wanted to call the line. We negotiated with them. They were very reasonable. Shocker. Super reasonable. And they termed it out over a 7-year period for us at 6% interest. Go figure. Now that's a variable 6%. It was 6% of the time. I think it's up to 7% now. But they termed it out over 7 years. Easy monthly payments. If I could pay it off at any time with no prepayment penalty, it's great. So we did have to go through an application process, but basically it was just window dressing. They said, whatever you put down, we'll do it. You've already got the money. We'll just term it out for you. The one thing I don't like about it, and I can't complain because I'm super happy that they turned it out over 7 years, makes it super easy to pay it back. The one thing I don't like about it, though, is every 2 years they still do a biannual review where I've got to go through this whole kind of fake re-underwriting process because it's not like, I feel like I'm applying for funding all over again. Finance Store is closed, so it's sort of a weird process. I just went through it recently, but it is what it is. Two thumbs up for Wells Fargo for how they handled it. They were super reasonable and turned it out. 7 years. That was quite a long time for terming out a line of credit that they could have demanded you pay back in 30 days. Or they start coming out and, trying to seize your house or something fun. I was pretty freaked out when that initially happened. So, all right, so that is number 2. Wells Fargo is definitely the winner in my book. And for me, the absolute loser, the worst of the 3, was First Citizens Bank. So First Citizens Bank, being the small regional lender, you think maybe they're a relationship lender, they're more likely to work with you. They were absolute assholes and the worst to work with. I'm just laying it out there. Done. They gave us a $100,000 line of credit and a $35,000 credit card, so we had about $135,000. I think we were using about $125 at the moment that they came back and said, all right, I see the Finance Store is closing. We want to get all our money back. They immediately, when I said I couldn't do that, they immediately actually sued us. So I then had to decide if I was going to go get an attorney or just to negotiate with their attorney. Frankly, I've never gone and paid for an attorney myself because of all the costs. I just don't think it's worth it. So I can't really tell you if it would have been better if I had tried to fight back in court. I think it would have been paid way more money fighting it back, so we didn't. But we were able to negotiate a settlement, and the best, and by the way, a settlement, when you do this, the court case never went all the way through, so it doesn't end up as a public record. There's no stain on anybody's credit or, finance store, but whatever, it's closed. So all in all, it was a decent resolution, but First Citizens Bank definitely made it as painful as possible. They absolutely required 50% of the principal between the two to be paid back immediately. We had to. There was no way around that. And then they termed out the remainder over 12 months at, I believe, 10% interest. The interest rate was reasonable, but the payments were very difficult for us to maintain at the time because it was very quick. So I think we paid back 65 at once, and we had to pay 65 back over 12 months. That was very difficult for us. So 2 thumbs down for First Citizens Bank. For my opinion, between the three, between U.S. Bank, Wells Fargo, and First Citizens wins the award for being the lamest and worst to work with. Wells Fargo wins the award for being the best to work with. U.S. Bank is somewhere in the middle. Now, kind of the sneaker in there, you'll find this interesting. There's a fourth bank whose name I will not name, and that's because we're 4 years into this, and they haven't checked or noticed that any change has happened in the business. They haven't required an annual or biannual review, so I'm kind of loving this bank right now. But because we still have the line and I'm just paying interest only, it's very easy. I mean, it's 5% interest. It's the cheapest credit out there. I can make way more money using the money for initiatives or for anything else we're doing than paying it back. So I'm just paying interest only and just kind of keeping that. They haven't noticed yet. So 4 years later, they haven't noticed. So that's why I'm not going to say it, because I don't want them to see this and then do whatever they might do. So we still have the funds. We're still using it for a different business, which technically is a violation of the terms. But they don't care, we don't care, we're using it, and they're still existing, and they don't know. So they're the overall winner for my 4 lines of credit that I've used, but unfortunately I can't tell you who they are for reasons I just said. All right, so there it is. Everybody who guessed Wells Fargo and U.S. Bank, you were both wrong. The winner of the loser award was one that nobody even voted for. So lesson learned here, it really depends on the bank. The other one is also a small regional lender. So you can't just say small regional lenders are worse. It really depends on the attitude of the person you're working with, what's happening at the bank. Is the bank going through trouble and they're trying to take it out on you? That's it. All right, so that's it for the day. I hope you guys learned something from this, and I hope you realize that if you're going through this situation, other people are. It's not as bad as you think. Be responsive, avoid court fees. If they really lean on you heavily, file Chapter 11. It gives you good options. I haven't gone through that yet, so I can't tell you exactly what those are, but that's it. So unless somebody has any questions, we'll go ahead and wrap it up for the day. Feel free to come back next week, April 17th at noon for Mystery Show. I don't know what we're going to do yet, so I just put a slide up, and I want you to come back. If you like the show, like it. If you appreciate me telling you about all the crap I probably shouldn't even be saying, then like that. If you're new to the show, subscribe. Or just go make some money, fund some deals. We'd love you to be funding those deals with us. All right, we look forward to doing a lot more deals together. Talk to you soon.